All right, guys, I know this is a little bit of a different format than I normally do for my videos, but I wanted to get this video up quick today before the Fed meeting. I think something big is happening today, and I could be wrong about this, but hear me out here. Since the coronavirus started, there's bank lending has been shut off. Like essentially, there's been zero bank lending. And I made a video about this when I first started looking into it, but there are a couple of reasons, especially, and it's mainly towards small, medium-sized businesses. Essentially, number one, if the business was impacted negatively by the coronavirus, the banks wouldn't lend to them because you're a credit risk. Why would we give you money? You might go under. Blah blah blah. That part kind of makes sense. The other reason why they wouldn't lend to them is if the businesses had actually done better during the coronavirus as a result, because then the bank said, well, this is just an anomaly, it's an abnormal spike, we want to see how things go, we want to see how things go after the coronavirus panic changes have kind of resolved themselves, whether you're still in a decent financial position. So essentially, banks were using every excuse they could, if they ever responded to loan requests at all, in order to deny loans. And this is from insiders in the industry who work with, when I say small to medium sized businesses, I'm talking franchisees with, dozens of franchises, like locations, people who work with restaurants like Jimmy John's and things like that. And so this was across the board, commercial banks not lending whatsoever. It was even very, very, very difficult to get your hands on, the money from the stimulus package that was supposed to be directed to small businesses. Now, all of these, the second reason is because almost every single business out there took an EIDL loan or grant, and that was basically because that was easy to get your hands on that money. It was just not a lot. Well, the problem with that is that the government then takes first lien position on the business assets. Well, no bank will offer a loan unless they can be in first lien position on assets. And I apologize if I'm misusing some terminology here, but essentially, business goes under, that means the government gets first claim on everything, and banks don't want somebody else in first claim position on the assets. They want to be in that position. And so there were tons of reasons that banks were using not to loan to small businesses, to the point where for bank lending hasn't been happening. It's been basically shut off for months. This is part of the reason why businesses are closing, because we have an entire society, an entire system that's built on the need to access debt. No businesses hold anything in reserves. No people, for that matter, hold anything in reserves. Who's the last person that you talk to who is not focused financially, who has 6 months of an emergency savings account? It's just not the average American way to do things. Businesses, same thing, and so they rely on credit. Well, when that credit stream shuts off, there are problems, right? And so, even with the lowering the interest rates to 0%, the Federal Reserve has not been able to get banks to loan. Well, fast forward to just a couple of days ago, it looks like the floodgates have opened. The spigots, everything has been turned back on. Within just the last couple of days, lending has gone full force and everywhere. First it was SBA, and now it's commercial banks as well. People who are inside the industry are saying it's been absolutely zero for months, and within days, everything is getting approved all at once. It's not something like, if this was a natural thing, if it was like just banks started to realize, hey, the economy looks like it's starting to move forward again, it wouldn't have been everybody all at once. Somebody talked to banks. Somebody met with them behind closed doors and said, it's number one, it could be negative interest rates are coming. I've said for months now, negative interest rates will never come nominally. I'm second guessing that now. That could be what's happening here. The banks could have been let known by the Federal Reserve, hey, we need to do everything possible we can to get inflation. Therefore, we're going negative interest rates, and you better start lending. That could have happened. Number two, another thing that could have happened. We know commercial real estate has been hammered. We know that America has more retail square footage than any developed country on earth by a lot, like a huge margin. Like we have way more, just per person. We've got way more retail square footage. So we've already that space has already been, to the point where it was oversaturated, that market. And now, as the economy is starting to take a big hit, coronavirus starting to unfold with the changes in how people are shopping, doing more online. A lot of restaurants got hit. Just all the changes, bad for commercial real estate. People working from home. Just there's like 10 things working against commercial real estate right now. Banks hold a lot of their assets in packaged up commercial real estate, and so it could be that banks were told, we know you're going to need commercial real estate bailout, basically, because these are toxic assets that are on your books, just like 12 years ago with mortgages. We know we're going to need to take these off your hands, and we're not going to do that, Federal Reserve speaking, unless you start lending. Because the Federal Reserve is adamant about causing inflation. They're pushing on a string right now. They're doing everything they can, but they can't force banks to loan because they don't have, ownership or control of banks. They can do, a couple of things, but ultimately it's up to the banks because they're private companies, right? And so it could be that they're saying, hey, you guys all need to start lending now, or else you're not going to get the commercial real estate bailout that's coming soon. So that could be it. There could be other things going on as well. It might not have been the Federal Reserve, but something happened. Something changed to where for months it was zero, and then within a couple of days, it's back in full force. So what does this mean for you? Number one, if you're running a small business, you've been trying to get a loan, go try again. Looks like floodgates are opening back up. Number two, Federal Reserve meeting today, Powell speaking today, probably going to say something, maybe not. Maybe this is going to stay behind closed doors for a long time and the public won't be made aware of it. But I would imagine that something will come out today that, they'll talk about opening up another facility to purchase, commercial real estate bonds, or something that maybe negative interest rates will be announced today. I don't know. But over the next couple of weeks, as lending comes on full stream and everybody starts being made aware of that, especially as it comes as a surprise. Literally today, Liz Ann Saunders, she's a chief investment strategist or something at Charles Schwab. She just tweeted today, a post about, looking at lending and saying how lending is going to continue to get tighter and worse. And so the mainstream has no idea about this, and they won't until it starts, and so this will be a shock. This will be a surprise. And so this is likely to have massive bullish effects on the stock market, because most of the stock market gains have been driven by a couple large companies. Most of the other companies, like the bottom 50%, I think it's like 380 companies, they haven't rebounded much at all from their March and April lows. And this is the smaller companies. And so I'm expecting that something like this will have massive bullish effects on the stock market here. So, but ultimately, debt, lending, negative interest rates, that'll be very bullish for assets like gold and silver, potentially Bitcoin as well. So that's coming out today, maybe. Might also just be something that you start seeing come out in financial mainstream news over the next couple of weeks, couple of months. But big news here, and I'm kind of hoping Powell says something about it today during his speech, but we'll see. So long story short, bank lending coming back online, assets go up, money printer go burr. Thanks for watching. Have a good day.